right, so we're in Davos, Switzerland today. We're going to do a serious mountain biking trip. This morning, we're going to go up some pretty serious mountains. My buddy's just getting a bike in the outfit. What are you doing, buddy?
Yeah, excited.
Well, that was another epic mountain biking trip last weekend. And one of the guys that was on the trip with me was a fund manager who's got a lot of insight in the company Twitter and the stock as such. So I got a chance to sort of pick his brain a lot, and a lot of the research we actually do together. But it was great to sort of kind of go over this stuff a little bit more in detail and in a less formal setting and a much more beautiful view than we have in the office. What I want to do today is give you guys a little bit of an update on Twitter, where things are. It's a stock that I've talked about here in these free videos before. It's a stock I talk about with Clubhouse members almost every single day over the past couple of months. I think there's a lot of opportunity. So let's have a look at what's going on. First of all, the news yesterday, Monday, August the 15th, was that there was an article in the New York Times regarding Twitter's strategy around some of the sports streaming that's going to do, particularly a deal with the NFL, where they're going to start streaming Thursday night football games starting on September 15th. So it's actually a big date, September 15th, for I think the stock, or at least the days around there or after there. So let's have a look at what's happening technically. And of course, Twitter has been a major source of pain. You see, after the initial rally here in 2013 fell apart, not unlike what a lot of IPOs have been doing. It's sort of a lot of exuberance for a couple of months or so, and then they fall apart, and then it takes time for people to figure out what's actually going on in the company. But if you look at it, just kind of draw some very simple lines. Obviously, when the stock broke below those 2014 lows in about a year ago, actually August 2015, then came back, retested it, and then really pretty much a lot of folks actually gave up on the stock probably around the autumn, very late 2015, so very late last year, really gave up on the stock. And that's kind of when the stock was ready to start bottoming. We saw that from a sentiment perspective, actually even on Twitter as a sentiment reading tool. Twitter, increasingly looked to be something that people were just sick of, the stock at least. And so to me, that was an initial sign that things are probably going to start improving. So if we look at Twitter, what then essentially happened is the stock started bottoming, and after it hit its low in February of this year, it then tried to break below there in May into early June, ended up holding this $14 level. And that was quite telling once we had confirmation. So there was a couple of things that took place then, more technically near-term oriented. I'm going to use an 8 and 21-day moving average so you can kind of see what's going on. But ultimately, stock pretty quickly overcame these near-term moving averages. If we then move into sort of our medium-term moving averages, 50, 100, and 200-day, red, blue, and yellow. So 200-day, 100-day, 50-day, just to draw some perspective lines. You can see basically what happened is the stock then pretty quickly started overcoming some what I think was some pretty significant lines of resistance here, particularly in actually just about a week ago or so. Now, the real trigger for stock that really got my attention to add on to a position was when the stock dropped after earnings on the 27th of July. Ended up holding these near-term moving averages here, or medium-term moving average, 50 and 100-day moving average, and literally within a few days filled this post-earnings gap and pretty quickly started overcoming this diagonal resistance line, and now actually even broke back above its 200-day moving average. Now, ultimately, I think the stock may be somewhat overextended in the near term. There's actually some resistance coming into the stock here, depending on which line the stock wants to actually respect. You've got some resistance here in, let's call it, the low 21s. I think there may be more significant resistance, probably somewhere closer to $23, $24 area. All in all, as long as the stock here remains acting technically sound, maybe there's going to be some backing and filling. I think the stock's going to be it will be just fine heading higher. probably into these mid 20s. There's a catalyst now that we just talked about, September, September into October, even maybe into November, as Twitter tries to get a handle of how well these NFL games are going to work for them on Thursday night, how well that money they're spending, which I believe is $10 million for these games, how much revenue they're going to get back from that, and that whole dynamics can work out. So I think there's a positive catalyst here. They've also signed deals with other sports, basketball and stuff like that. So I think Twitter here is trying to gain a lot more traction, not only from a price action perspective, but also from the investing community I speak to on a daily basis. So I think Twitter here looks to be a pretty decent bet here into year end.